So really the purpose, the point of this panel today is a sanity check on blockchain. When we set up the Whitechapel think tank about 4 years ago, exactly 4 years ago, almost exactly 4 years ago, blockchain was something which, frankly, everybody wanted to know about because it was just hitting, if you like, the public consciousness. Well, in that short 4-year period, we've now moved from a situation where people just needed to know and understand what broadly it was about, to the next phase, which was, of course, that sort of mini hysteria, really, where all the hyperbole and the hype behind it built to a crescendo. And I think people were beginning to see, a bit like they do artificial intelligence at the moment, that it's a panacea for everything. And Manoj Saxena was quite interesting yesterday when he said that he thinks AI is headed in the same direction. Now, blockchain has passed that phase. And the question really is, has it now moved to the point where it's becoming part of mainstream activity, but in a more discreet and low-key, low-profile way? Or is it working, therefore, with these other technologies as well? And as a result, the clarity around blockchain itself isn't quite as sharp as it used to be? Or is it simply a pipe dream? So the point of the panel, I think, is to just test that today. And the way we're going to do it is that we'll ask each member of the panel. There are 3 members of the panel who have specific applications that are, if you like, on the runway, if not have already taken off. And just to talk briefly about those individual examples, or if there's more than one, more than one. Why? Because we want to give you a sense of what it actually looks like when it's working, this technology. Then the next thing, I'll ask Simon at Allen and Overy. Incidentally, I'll ask everybody to introduce themselves as they start to speak, because you can then link the name of their own enterprise with the product, if you like, that they're talking about. And then I'll ask Simon from Allen and Overy if he can give an overview of anything else that he can think of from their very broad perspective of what's going on. So that gives us some fairly specific anchors. Then the next thing we'll do is talk about some of the generic issues that every one of them have come across if you're thinking or if you're moving down the road of putting a blockchain application fundamentally into your business. And then lastly, we'll finish with, I've got this thing here with questions from the floor. So if you've got any questions as we move through this, by all means, please put them down. I'll pick up as many as I can, but I hope you'll forgive me if I can't pick up all of them when as they come in. So why don't we kick off with the first example or suite of examples. David, can I ask you, first of all, to introduce yourself? If you don't, I'll remind you to. Introduce yourself and then talk. I've just asked every one of the panel members to spend only 3 minutes on this, so we're going to try and keep it as short and snappy as we can, because we're trying to just draw the picture for you.
Certainly, thank you. Thank you for the introduction. My name again is David Pinski. I'm with Hitachi. I'm the chief strategist and head of the Financial Innovation Lab for Hitachi, which is based in California. Here in the UK, Hitachi is probably better known for our trains or our consumer electronics, but actually in financial services, especially back in the Asian markets, Hitachi is a major provider of financial services, doing everything from providing core banking services to running payment networks throughout the world. So we have a very large presence. We have an office here in the UK to service both our Asian customers, but also a growing presence for European and UK customers also. At the labs at Hitachi, where I work, I'm not necessarily focused on a particular solution or a particular vertical, although I focus on financial services. So I'm part of the R&D organization. So I support a horizontal function across all of the Hitachi units. So in our lab, we're contributing to the open source project of Hyperledger. So a lot of the solutions are built on top of that, although technically we're agnostic. We've done work on other blockchain platforms. The history with blockchain actually goes back pretty far at Hitachi. We were doing research in the underlying technologies well before Bitcoin came about. And so moving on to the topic, though, of the bubble is that people often just equate the technology of blockchain with cryptocurrencies. And the earlier conversation about regulation stuff. It's actually probably one of the best use cases when you encompass that full technology suite. But I try to look at the technology as its component parts and what can you build with all these underlying technologies, because the technology that led to those cryptocurrencies, the individual components of it. So when you think of a, say, distributed ledger system, there's a hashing component that's used that I look at as a data proofing system. There's the distributed system, which really harkens back to the days of Napster. How do you distribute data across these loosely managed nodes, you could call it. And then there's this whole concept of consensus and the concept of smart contracts actually representing your business process as code. There's a lot of different things you can build with that. And the end result may not look at all like a blockchain system. So, a few years ago, I once said on a different panel, when they said, when's blockchain going to be successful? And I said, when people stop talking about the underlying technology really and start talking about what is the end solution I've built with the technology, and the technology itself not being the important point. And to that point, if a vendor or somebody came to talk to you about some new solution, they're not going to talk about, did I use DB2 or Oracle or SQL Server? Nobody really cares. What they care about is what is the use case you've solved for. And I think we're just starting to get there. I think the hype has sort of calmed down a bit so that people can start talking about actual solutions that leverage the technology. And I think there are actually some good examples in the hall. I think that we'll probably be getting to chatting about later in the panel discussion.
Okay, David. Are there any that Hitachi are working on and that are working in anger, so to speak?
So we have one example around green energy management. So green energy bonds is a big issue in Europe, and hopefully it'll become a big issue globally at some point. But the idea that you're managing these assets, but in the case of Hitachi, since we're an operational technology company in addition to IT, all of those IoT devices that are generating data about those energy bonds, whether it's a wind farm or consumption on a corporate side or a factory, managing all that data on a blockchain in that distributed environment, it's a really cool use case. It's not really technically a financial services use case, although it touches because there's that financial, there's that bond involved in it.
Sure.
That's sort of one of the driving forces, but really it's about how do you bring together industrial components with a financial component and blend that all together. So that's one example that we're showing here.
Good. Thank you very much, David. We'll crack on. Irene.
Thank you. Thank you for having me here. It's wonderful to see this turnout for this specific topic. My name is Irene Hernandez. I'm founder and CEO at Gataca, a digital identity solution for the financial industry. And we're basically trying to enable one-click onboarding experiences, all while remaining KYC compliant and saving a lot of money on compliance to these corporations along the way. In my previous work, I also researched at MIT Media Lab on other business applications, so happy to explain further on other real applications I've seen out there. But coming back to identity, which is my area of expertise, I would say that the pitch has evolved quite significantly. And I'm happy to see that in events like this, it has become not only a real business application, but also a main topic that has content to discuss on a panel. So I would say that 2 years ago, we were seeing a lot of people looking for problems to solve with this technology, instead of trying to find technologies to solve their problems, which is very much in line with what you were mentioning. And I'm glad to see that digital identities was one of these business applications that managed to overcome this hype, this bubble. We've seen 2 years ago, the conversation with large commercial banks was very difficult to start. We had to explain what blockchain technologies were, why to justify why they really were needed to build a trusted global identity. And now the conversation is very different. We've seen governments lead national-wide initiatives, Japan, Thailand, Singapore, building entire groups with regulators, with financial institutions, and with startups to build a digital identity ecosystem. So I don't want to take much of the time for my rest of the colleagues to speak, but happy to explain later on what are the roadblocks that we've seen along the way.
Good, thank you, Irene. We'll come back to that in a minute or two. Imogen.
Thanks so much, Jeremy. Hi, my name's Imogen Bunyard. I'm the COO and co-founder of QADRE. We're a B2B solution provider. We've got our own proprietary blockchain technology, which we've designed from scratch. The founding team have been in the blockchain space for years, battle-hardened veterans like yourself, Jeremy, which has been all of 5 years, which for blockchain is truly ancient. And we all came to the space recognizing that cryptocurrency has its use cases, but any technology is not worth its salt unless you've got a really solid use case and business model behind it. And so at that point in time, the conversation was very much around Bitcoin and Ethereum and illustrating to people the differences between those technologies and the underlying potential of the tech. And moving to now, we get to see some real-world applications. We saw Settle a few years ago, which was initially built on our technology. We've also done a lot of work with the FCA sandbox. So Disperse was one of the companies we put through there. It's fantastic. We've got a regulatory environment which enables us to do this. And now we've recently launched our partner accelerator, State Zero, and we've got a few use cases there which are operating on our technology and our live implementations of blockchain. So when people say, when are we going to see this technology live and used, that was happening years ago. And today we've got some really exciting and up and running companies demonstrating that this technology is about more than cryptocurrency. So 2 examples from the first cohort, which are worth mentioning. One is an assistant in hedge fund management, effectively providing one version of the truth for all of the different parties involved in fund management to avoid any of the complexity or lack of understanding of that common held truth, and reduction of any of the inefficiencies that you have from very paper-based systems. And another one is an HR incentivization scheme. My Resonance effectively enables you to tokenize incentivization within your teams and try and drive the values that you hold in your company by enabling that token exchange within your teams. So these are just 2 examples of hundreds of different use cases of blockchain technology that we are seeing emerging internationally. We had the World Bank yesterday talking about their launching their blockchain bond, and this is really the start of things. And I think we've finally progressed past that conversation of what's Bitcoin to blockchain, and we can start to see a really broad array of use cases emerging.
Good, thank you, Imogen. Okay, that's very helpful. Simon, the sense you get listening to this, remember this is just a microcosm. There are thousands of blockchain applications being brought in all over the world now. But how many of them will come to commercial reality is the type of conversation we're wanting to have here. But the sense you get, when you drive around this country now, there are housing estates going up everywhere. We've got one going up not very far from us. And in the first instance, all you saw was a lot of sort of building materials. Now there are foundations that have gone in, and you're seeing the occasional house having been built. And I was really struck by the fact that, and I'm increasingly struck by the fact that what is under construction is a massive housing estate of blockchain applications here, literally country by country and globally. But Simon, can you give us a sort of sense, are there any other areas in particular that will give us a sense of the hard-nosed commercial application of blockchain?
Sure. So my name's Simon Toms. I'm a partner in the fintech and blockchain team at Allen & Overy, based here in London. It's interesting to talk about tokenization. I think on the theme of a bubble, we've probably been asked to look at the legal issues about tokenizing virtually anything you can think of: houses, wine, whiskey, the marriage register, any number of different things that various people in the last couple of years have asked us to look at on the legal and regulatory side as to how you tokenize it. I think what we've noticed is a big shift in the last 6 to 12 months about people looking at longer term use cases where it's actually relevant to have blockchain as a piece of technology that underpins either a service or some infrastructure. So particularly in the financial markets infrastructure side, looking at how blockchain can be used to replace traditional settlement systems, and certainly new entrants and new companies looking at that, but also realizing it's important to partner with bigger financial institutions who have the market know-how as to how clients and customers want to have certainty around settlement. So a lot of focus around that. And then moving to sort of trade financing, commodity trading, looking at blockchain again, where you're looking at multi-jurisdictional cross-border transactions, where people want some sort of certainty around the register as to who owns what and where. So I think in those two areas in particular, we've seen a lot of significant funding and money being placed by both new entrants into the market, but also bigger, more traditional players that perhaps you would think are not so technologically advanced, but are thinking about those topics and how they can use blockchain to solve them. I think David's point is right, they're trying to think about what is important, or where is it important that blockchain can actually add something to a solution. Certainly a lot of the kind of ICO, STO structures we worked on, people were trying to raise money quickly. When you started explaining the costs involved of a multi-jurisdictional equity offering to a sort of global investor base, including retail investors, and all the regulation associated with that, you soon realize the legal costs alone were going to swamp the total sum that the company was trying to raise. It was much smarter to go and see their friends and family and get a check, rather than using blockchain. So I think we have seen a move actually to people being much more sophisticated about it, and the market players and the participants using blockchain also being much more sophisticated in the types of applications that are being thought of in the context of blockchain.
Yeah, good. Good. Okay, well, that gives us a reasonable sense, I think, of where it's at, actually. I don't think this is a bad cross-sectional picture of where blockchain has got to. My interpretation would be that it's still in the relatively early foundation stages, maybe just a few bricks above the foundations, but the construction is well underway. In that process, maybe we can just open this up briefly, there are some generic issues which have cropped up here and which are being talked about in the last couple of days anyway, not necessarily in relation to blockchain, but more broadly. I'm just going to list a few, but then we maybe pick on a couple. Of course, this involves shifting infrastructures and within enterprises and within groups of enterprises. It also suggests that we need a whole new suite and set of standards. There's also the whole issue of how do you regulate this stuff. And last session was about regulation of crypto, but this is pretty important in this field as well, in just the more generic blockchain applications. And then there's the legal component. And lastly, well, maybe not lastly, but this issue of the fact that blockchain doesn't anymore stand alone as a technology. It looks as if it is increasingly going to be incorporated with other technologies in the construction of a completely new operating system. So maybe we should just spend a minute or two on that. Since we just come from a regulation session, why don't we just start quickly on regulation? Would anybody got any particular points they would like to make about the regulation of blockchain, particularly as it applies to you if you're setting up a new blockchain initiative within your own enterprise?
Well, let me just make one very quick comment, and that is let's separate regulatory frameworks from the technology. So regulatory frameworks are about the use case and what you're trying to do with it, because what you might build may or may not require any regulatory constructs. It might simply be an underlying technology. So if you're doing the ICO, yes, you probably need some regulations around that. But if you're building, let's say, a data governance system using blockchain components, I don't see that as a necessary thing.
Yeah, that's very helpful. Simon, you...
You know, I'd agree with that. There's no sort of blockchain law as such. It's more thinking about what it is that you're actually doing and making sure that where you're doing it. I think that's the other key thing. We've seen a lot of parties come together and try and, particularly for the market infrastructure type products, make it more on a permissioned blockchain to try and control some of the regulatory difficulties you otherwise get into because you're trying to have something that immediately works everywhere. It depends on the use case. It could be an unregulated activity altogether, in which case it's much easier to have something that's accessible around the world straight away. But I think having that initial sort of discussion and thought process about what exactly you're doing and where you're doing it and who you're doing it with, that really, those are the points you've got to cover to work out what regulation or legal framework you're dealing with.
Very helpful. Any other points?
Yeah, I'd say that it's very important to clarify that delineation between crypto asset treatment and the regulation around that and blockchain as a technology. The only regulation that we have any engagement with is financial regulation, and the fact that we're automating, we're moving from paper and faxing-based systems to a digital system, and so making sure that that regulation is fit for purpose to enable us to deliver that specific use case. Whilst it is important for the blockchain space, particularly new entrants like ourselves, to have clarity around crypto assets, because otherwise we inadvertently get the repercussions of lack of clarity around regulation. For example, a lot of blockchain-associated companies can't get bank accounts as a result of that affiliation. And I'd say we're very fortunate in the UK, as has been discussed multiple times over the last couple of days. The FCA is a very forward-thinking and a very lenient regulator. We were discussing a little while ago. It would be quite interesting to see them emulating more of their approach, more of a proactive engagement rather than a passive and allowing the community to come to them, going out and using endeavors like the sandbox to really drive that conversation within the private sector.
And to build on what Imogen is saying, I'm very much aligned that we should really look at the specific use case and not the technology. For instance, digital identity, we should not regulate it because we're using blockchain technology, but because we're touching KYC, and that is indeed regulated. And yet, we've seen a correlation between governments that are looking into blockchain, perhaps in the wrong way, and the development of business applications in that country. And I think it's a matter of mindset. If the regulator is already looking on how to regulate blockchain technologies, even if it's not the right approach, at least it's the right mindset to open up opportunities to implementation of other business models.
Okay, thank you very much. Let's move on there. That was pretty informative, actually, because it shows the maturity of the discussion now. So this is, to summarize quite quickly, what we're doing, regulation is important where it is relevant to the application itself, and I think many people could find that useful simply to take that away. What other areas, I'm just going to change the way we do this slightly, what other areas would you say have been the bigger hurdles that you've had to overcome or you've seen being had to overcome in the introduction of any blockchain founded application? I'm trying to use that word, David, because I'm very conscious of the fact you're saying there's nothing to do with technology. It's what you use the technology for that matters. So are there any other specific areas? Well, I mean, I listed a number, but are there anything else that anybody would like to pick up on? Imogen, let's start with you first.
Yeah, I would say the area that I'd like most to see changing over the next couple of years is people's attitude to blockchain. Either you have this very rose-tinted approach, primarily driven by people who have cryptocurrencies themselves, who see anything that blockchain touches to be an ideal solution, and regardless of the business model or the team or the technical competency therein, it's going to work. And on the other side, you have people who have been burned by a lot of poorly run internal innovation programs, a lot of this very light touch innovation work, which has turned them off to the technology, and they don't see any value in it. And AI is suffering from a lot of this negative press at the moment as well. So I think coming in with a very healthy sense of skepticism and making sure that we are looking not at the technology, but more at the business model, looking at the teams delivering it, and making sure that there is that cross-collaboration and communication within the private sector, the new entrants and the incumbents, but also the public sector, the regulators, and keep that debate moving forward and make sure that we have a sufficiently Darwinian evolution-driven blockchain space to sort the wheat from the chaff.
Irene, why?
I'd briefly say that collaboration between startups and large financial institutions have been one of the biggest challenges so far. My perspective is that most of the innovation is led by startups, and yet large financial institutions have to fight with their legacy systems, their bureaucracy, and that's how to complement both worlds. It's what's going to be challenging. So at the beginning, we saw startups trying to disrupt the industry and building things on their own and kind of take the market out of financial institutions. I think the right strategy, and is what we are seeing now, is startups collaborating with these financial institutions to make this happen.
Simon.
Yeah, I'd agree with that last point, particularly on the technology side, that I think many of the big financial institutions do struggle with some of the legacy issues that they have, or at least the pace of change. But the reality is some of the knowledge that you need to use or implement a blockchain solution, particularly in the financial services space, requires the history and the knowledge and the teams that big financial institutions have that in the best world in the world a startup will not have. They will have great technologists, but they won't have people who have great experience often, particularly at the startup stage, around regulation and interaction with regulation, customers, what are people's requirements. Even if the idea is great, no one's going to buy the product or use the system. So I think that's a really important, that cross-pollination I think is a really important point.
I was actually going to build on the issue of large institutions adopting the technology, because there is a particular problem or challenge that I think people haven't really confronted yet, which is large institutions have IT operational organizations that need to know how to run these systems. And some of the use cases that are the most attractive, like for instance, money movement using blockchain or settlement on blockchain, are sort of really go to the very core of what a financial institution does. And they tend to be very risk averse about these systems. In my past banking life, just introducing a small change to a SWIFT message or an ACH message was quite a big project, not necessarily from a technology standpoint, but from a compliance and testing standpoint. And today, the challenge is that if you deploy one of these systems, the IT organizational groups don't necessarily know how to manage it in real life. They don't know how to scale it. Even though it's redundant, there's still issues around backup or redundancy that needs to be managed in an institution. So institutions, I encourage them to deploy smaller systems that are not so critical. So they may not be, say, the highest use case for the technology, but they allow the organization to get used to using the technology so that when they deploy something that's mission critical, they know how to keep these systems up and running and know how to manage it, and they have people there with the skill sets to code it, to control the thing in the real world. And I think most institutions haven't stopped to really consider that, so they're going after these really big, juicy use cases, and the reality hasn't quite set in. When they go talk to their ops group and says, okay, we're going to deploy this, and the ops guys go, what is it you're giving me to run? There's a disconnect there that I think a lot of institutions haven't confronted yet and are really just starting to, because now they've tried, if you look at sort of the fits and starts of some of these money movement systems, it's, okay, let's do some test transactions, like, oh wow, we really don't know how to run this thing in production quite yet. And then it's 6 months later until they do another transaction, because they realize they've hit that roadblock that they need to work through. So that's part of the reason I think why these systems are taking a while to really get deployed. But hopefully I think organizations are taking that step back and taking the time to build the IT governance and management capabilities around the technology.
Brilliant. Okay, so we've got 3 minutes really, and there are a couple of questions here that one or two of which we've touched on, a few questions we've touched on, but maybe if I could just add one more component which we haven't addressed, if you like, from my own perspective, if I'm allowed to do that as a moderator, and that is that the thing we have discovered, for example, in Barclays when we were looking at the trade finance solution, is that the trade finance world is made up of so many disparate parties, whether you're a freight forwarder, whether you're a customs and excise operator, whoever you are, that actually you can do that on a very narrowly focused basis down one supply chain for a bunch of grapes. But if you're trying to do it systemically, there is a vast universe of people who have to understand what the technology is, have to have the appetite to introduce it, and work their way through the entire system. So the point that you were making, which is start reasonably small, David, and then get on with it, is probably the way it's going to work. There's another experiment which Barclays is part of, utility settlement coin, I think it's called. I always get that the wrong way around, which is just a group of banks in the derivatives field, in the settlement of securities. And I think that approach seems to be the way in which this is moving forward. So what we've got here is a clearly forward momentum, it seems to me, established in the blockchain world. I don't know about you, I don't get any sense of a bubble in this, not anymore. This is fairly hard-nosed work that is now going on to developing solutions. And that really brings us on to one of the questions, which was, will blockchain ever become efficient, thereby finally satisfying a key commercial requirement? When do you think that moment will be, where people will say, now you can see how much money is being saved or how much money is being made, and where do you think that will be? Anybody want to take a stab at it? You got close to some specific examples. Why don't we start with, I was going to start with Imogen and then you, Simon.
So there was a really interesting point made yesterday, more broadly, about fintech, that we've been primarily seeing B2C solutions because people solve the problems that they have. And so generally those are consumer-oriented problems. We're starting to see a bit of a shift to B2B enterprise solutions in the blockchain space, mimicking that broader fintech trend. And I think that's where you get the really large operational savings piece, which is by and large where blockchain and automation as a whole can really be a commercial benefit. I would say hopefully that will be next year when you start seeing some of our products coming out. But it's a lot of the issues we've been having is the fact that people are using these public networks for their pilots and for their proof of concepts, and their lack of scalability is always going to be an inherent blockade to that commercial outcome. So I think it's a maturing of understanding about which technologies we should be using under the hood, and then we'll hopefully start seeing some products where you don't actually know you're using blockchain. And that's where I think the real value prop is going to come.
Mm-hmm. Great. And Simon, you were looked at.
I think of the projects we've seen and worked on, it's on the settlement side, because if you can reduce the amount of time money's tied up in the system, that's the big prize everyone's aiming for. But then you get into the issue of everyone moving fast enough to do it. So I don't think next year maybe for that, but I think in the medium term, that's the...
Yes. So not next year, but year or two as this all moves forward. There was one other question, and we've run out of time, but I think we're okay because it was a very good question, which I think has already been answered. There has been a comment that blockchain is a solution looking for a problem. And I think all of you in one way or another have addressed that. So I hope whoever asked that question feels that it's been answered. The clock now says 000, so that means we're out of time. Thank you very much indeed, everybody, for listening. And I'd just like to thank the panel very much indeed for their contribution. Thank you, guys.
Thank you.
Thank you.
Thank you.